Hi, I'm Mike Bellafiore, author of One Good Trade and the Playbook, and co-founder of SMB Capital and SMBU here in New York City. Recently, I was the chairman at the trading show in Chicago, and I gave remarks characterizing the marketplace as I saw it and highlighting the opportunities for the rest of 2014. And I thought I'd share those comments with you, with the trading community. Perhaps they can add some color to your trading. So I actually was asked to make some remarks as chairman in a New York event for a quant conference at the time. I characterized the markets as strange, as challenging, and I would do so again today. I would characterize this market as challenging, but I would do so for different reasons. And I would also characterize this marketplace as opportunistic. We'll explain why. So why is it challenging? The correlations are drunk. There are too many days where the SPYs are up, the Qs are down, the Russell's even worse. Those traditional correlations are messing up some of the bigger traders. There are other correlations that are working nicely, but many of the big money traders are getting messed up in some of these correlated trades. We're at market highs with most looking for a sell-off. That's challenging. What do you buy? We have a market structure that's run by bots, HFTs, and dark pools. We have big money that almost has a disincentive to make good risk-reward trades. They have to buy the pullbacks or else they're going to be left behind. There's a great term for how we're growing as an economy called the Great Moderation Economy. We're growing at almost 2%, but many want us to grow at 3% and more. We have this great moderation economy. It's not doing terribly, but it's not doing as well as people would like. We have low wage growth, high unemployment, yet the markets are high. We saw recently rotation out of tech, a big rotation out of tech, and some of the darlings of the street, yet we're at market highs. We're in this period which we call the new normal. Steve Spencer talks about this a lot, the new normal, pound sign, new normal, which equates to anemic volatility. For those of you who don't know, volatility being so low makes it very difficult for big money traders to make money. And lots of quantitative strategies that worked well in the past have to get shelved. Long shorts are struggling, again, because the volatility is so low. When is that going to pick up? HFTs are hurting. Regulators are turning their attention to the SECs of the world and then now to the flash boys. Every day on our desk, we talk about the flash boys, the HFTs that we ought to avoid in our trades. Congress is fighting like school children. You've got retail traders mainly on the sidelines, though their activity is picking up a little bit. Bonds and interest rates are low, very, very low. Money is being dumped into the marketplace as a result. At a dinner chat that I had in Chicago recently, I was meeting with a really talented trader. We spent 30 minutes talking about the best dark pools to execute on. Dark pools are hidden orders. So there's the lit market where most traders, most retail traders place orders, and then professional traders oftentimes fill orders on dark pools. They're hidden orders that are outside of traditionally what lots of retailers have access to. We have the financial media entertainment complex in its 5th year of warning us about the next downturn, and all we've done is gone up. We trade in interesting times. We trade in challenging times. And having said all of that, there's still plenty of opportunity. Howard Lindzen, the CEO of StockTwits, coined the marketplace we've been in over the last 5 years, and he calls it the inconceivable rally. And certainly my comments before that add some credence to that. It's the inconceivable rally. We keep going higher, and very few people saw it coming. And very few people, even now, are finding things to buy. You would have to be a trend trader believing believing in a system where we're not actually going to stop buying until something new occurs. Because all of the pullbacks cause higher highs. We perhaps, in terms of opportunity for 2014, perhaps we're seeing a gold technical correction to the downside. Peter Brandt produced a wonderful chart pointing this out for us, showing that perhaps gold is breaking to the downside. Are interest rates ever going to rise? And if they do, there are lots of very interesting trades for big traders to make, for retail traders to make, for prop traders to make, for hedge fund traders to make. There's a lot of really terrific things to be thinking about there. The Alibaba IPO. We had a great IPO today in ANET. Everyone is talking about, they're chomping at the bit on our desk, waiting for the Alibaba IPO. And I know lots of other desks are as well. Is it going to be valued too high? Will it make Amazon look small? Will be a big failure. But there's going to be, whatever your view was to whether it should go up or down, there's going to be plenty of trade opportunity there. Our economic engine with regards to our banks are still sitting on trillions and trillions of dollars. Our corporations are still reluctant to release tons of cash into investment. We're not running on full cylinders. What happens when banks start to get a little bit looser with lending and corporations start to have more confidence in investing? What will that look to GDP? That's actually what needed to get us to go from just a little bit under 2% to over 3%, which would be a hot economy. There's geopolitical trades. There's geopolitical trades like Russia and Ukraine and China, and then question mark, question mark, question mark. You know, what's going to be the new conflict that opens up opportunity? With Russia and China and Ukraine, there's lots of energy trades that are available. If we see something new, if there's a new event, we'll start to think about the new trades that are coming up. Opportunity 2014 continuing. So we've got the GDP at 2%. What happens if it grows at 3% and more? What's our trade there? China markets are opening themselves up. Their markets are starting to look more like our markets in terms of how long or how short of a time period you can hold something. So the time periods for their trading has become much shorter. You used to have to hold things a little bit longer to buy and sell things. Now they're becoming more like us. They're coming up with options, equities, opportunities. What does that mean for us as traders? What does that mean for our markets? And what does that mean for opportunities there? Spain, does their growth miss recently spell more trouble for Europe? Yesterday, Europe took very, very decisive acts to attack the potential deflation problem that they're seeing there. They're starting to do things that we did, that our central banks did about 10 years ago. What's that going to mean to our markets and to their markets? Housing is slowing. According to most projections, the last 12 months, housing has grown at 12.4%. Over the next year, projections are it's going to get a little bit slower, but still grow at 7.5%. By 2016, projections are housing will grow at 4%. So there'll be a little bit of slowing in housing. Lots of good trade opportunities there. We've had an unusually cold weather, which is the reason that we are giving for GDP coming in a little bit under 2%. Now that that's gone, is that going to allow us to heat up a little bit, both literally and figuratively, with the marketplace? Apple breakout above 600 is a big event. Has Apple become the #1 stock again, like it was about 18 months ago before it pulled in a little bit? Does that become the lead stock again in the marketplace? Tesla, I feel like if you're a trader and you do not have an opinion, short or long on Tesla, it's almost like you're not trading. So there'll be plenty of opportunity long and short with Tesla. This is a high beta stock. This is a growth stock. Some people feel is up way too high. Other people feel is still got some room to go to the upside. That tech sell-off that we recently had, was there a bottoming process? Like you can see the recent bounce in Netflix. Are there opportunities there since they sold off so much? There's a volatility trade. There's volatility strategies that have been on the back burner that can get dusted off and run again. Oil and gas technical revolution. Lots of good opportunities there, particularly if we greenlight the new gas lines from Canada to the Midwest. There's the, whatever your view on politics is, there's a midterm elections trade. Healthcare, defense sector, you want to be looking at those stocks and thinking about trades there. Fed bullets. Is the Fed out of bullets? They've made up terms recently like quantitative easing and forward guidance so that there's more stability in the marketplace. But as they ease less, is that a period of time where volatility will spike? And I can tell you a very, very large hedge fund trader made an excellent point at the show I was at in Chicago, where he said that there hasn't been a period of time in market history where quantitative easing ended and then markets and their volatility didn't increase. So we'll look for that. You know, maybe we are near the bottom for volatility. I think this is the best time to be a market player because global markets still don't exist for most retail and semi-professional and even hedge fund traders. We have global companies. If you're great at something, you can become a global brand in the way that our economy is set up. You can put your stuff up on the internet, you can get tapped into social media, and with not a lot of money, if you're great at something, you can branch out and reach a lot of people. But we don't actually have real access. Most people don't have real access to all the markets, and that's probably going to change. And when that changes, if you have skills as a trader, there's going to be a lot more opportunities for you to be able to make money. We're seeing the democratization of quant trading through innovation. So we have a JV, we're involved in a JV with the Discretionary Trading Group that has built proprietary technology called GrayPie, which our traders on our desk use, where they can sit without the ability to code and start working on automated strategies. As these software innovations develop, there's going to be more opportunity for discretionary traders and for quant traders. I'll leave you with an idea which I think we should talk more about, particularly for discretionary traders, which is a blog post I wrote about somebody we'll just call Rookie of the Year. We looked at this gentleman's equity curve compared to other people who have started at our firm over the last 18 months, and it stood out. It was the best equity curve of new traders that we've seen in quite some time. Might have even been the best that we've ever seen. I wrote an email to this gentleman and said, hey, tell me why you think you've been successful at the beginning of your career. And he mentioned something that I think is very important. He talked about how he uses our proprietary platform to build custom filters. He did. He used our proprietary platform to use custom filters for the setups that he was very comfortable with. So he would build bull flag custom filters and bear flag custom filters. He would map everything out beforehand, trades he felt comfortable with, and then he would only trade those setups. His signals would go off, he'd type up the stock, and he'd look whether or not he wanted to get long or short that particular stock. I don't think discretionary traders are bionic enough. There are a lot of experienced traders that we're working with at the firm, and I feel like I pound the table for them to be more bionic. I feel like I spend a portion of each day trying to get our better traders to spend an hour a day working on custom filters so they're more bionic, so they can play more offense. I don't think discretionary traders should be sitting there just with their intuition scattered, not knowing and not using high-powered technology to be scanning marketplace for their best setups. A really good discretionary trader armed with bionic technology can do a lot of really good damage in the marketplace. They can very much increase their P&L to much more than perhaps they recognize. And I see this across shops. We interview a lot of people that want to be fully backed by the firm, and we look at their numbers and we start to ask them how they're making money, and there's just too many discretionary traders who are not bionic. They're not building custom filters for their best setups. They don't have filters scanning the markets for plays that they really trade well. I think that's as much as automated trading is going to continue to become more prevalent, and as much as our firm is working to get our discretionary traders the tools so they can build automated strategies, I also think discretionary traders are just not tapping enough into technology and leaving a lot of money on the table without being more bionic. So you want to be bionic, and you want to have automated strategies, and you want to have some real capital behind you. So on that note, that's how I'd characterize the market, challenging, but there's also tons of opportunity. That was not an exhaustive list. Those are the things that I highlighted. I can also tell you that somebody came up to me after the show who works at a very, very large hedge fund and said about my prepared remarks in Chicago that it was if my remarks could have been lifted from their presentation that they were actually giving to their investors. So these are the things that professional traders are thinking about. These are the trades we're preparing for. I hope that helps your trading, and we'll talk to you soon. Hi, I'm Mike Bellafiore, author of The Playbook and One Good Trade, co-founder of SMBU and SMB Capital here in New York City. If you want to learn more about SMB, please go check out smbu.com. Check out our blog where we share tons of trading tips, trading stories, trades we're in, trading anecdotes, and also take the time to sign up for our 10-day free training program, which we offer to the trading community at smbu.com. We hope you enjoy it. We hope to see you on the site. Trade well.